Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Cybersecurity Awareness Month, which takes place every October, now in its 19th year, is a collaboration between government and private industry to raise awareness about digital security and empower everyone to protect their personal data from digital forms of crime. Joining me for this segment, we have Paul Brody, Global Blockchain Leader at Ernst & Young, EY, to discuss how companies can ensure that they are able to have privacy in their business transactions on public blockchains like Ethereum. Paul, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
What does the state of crypto look like after Ethereum's merge? Is Ethereum on path to have dominance in the blockchain space?
I certainly think so. I think, in fact, Ethereum was really on a path to dominance long before that. It was 75% of DeFi, 95% of NFTs. But after the merge, it really showed, particularly because the merge went so well, it really showed, especially enterprise leaders, that this nonprofit organization, this collection of developers and participants and companies in this ecosystem can migrate a multi-billion-dollar technology infrastructure without significant issues. They can do it carefully and they can do it well.
If public blockchains like those on Ethereum are the future, how can companies ensure that they're able to have privacy in their business transactions on the network? And what is EY Blockchain doing or has done to solve this problem?
So there's two things that you really want to do to have privacy on the network. The first is you want to be able to move your assets around under privacy. And the second is you want to be able to keep your business agreements secret from your competition. And so what we are doing and what others are doing is they're using a technology called zero knowledge proofs to create private transfers and business transactions. And for example, at EY, we've developed a piece of software called Nightfall. It allows you to move things back and forth under full privacy with security, and it's now available as what's called a layer 2 network on Ethereum. And we've also developed a technology called Starlight that allows you to take a business contract and compile a set of mathematical proofs that allow you to run it on a public blockchain without participants being able to see the exposed business logic underneath it.
Besides privacy guarantees, what else needs to happen for more widespread institutional adoption of crypto and blockchain technologies?
I think there's really two important things. Number one, enterprises need to be thoughtful and careful about how they transact in the blockchain ecosystem. That means not just building privacy, but also testing your smart contracts, picking stuff that is relatively mature and kind of stepping your foot into stuff very carefully over time. Otherwise, with any time there's a new piece of software deployed, there's always the risk of bugs. You want to wait and see how it matures and be careful in that respect. The second thing that's got to happen is we need more positive regulatory clarity. So there's a lot of action going on by regulators to go after bad actors, but we also need some positive regulatory rules that will say what you can do, particularly in the stablecoin and DeFi space.
That's a great point that you bring up, Paul. EY is part of the WEF's recently launched Crypto Sustainability Coalition. What is the coalition aiming to achieve, and can blockchain be part of a climate-friendly future?
So one of the great things about the merge, for example, with Ethereum is it reduced Ethereum's carbon footprint by 99.5%. So first and foremost, we have to not be part of the problem. And I think that's really moved a long way positively for blockchain. Secondly, though, blockchain can be part of the solution. And in particular, the path that we see forward is this ability to track your carbon emissions, to be able to purchase offsets, and to be able to purchase offsets in a verifiable global marketplace where the rules of blockchain, which prevent double counting of assets, double production of assets, can make sure that when you buy a carbon offset, only one of that was purchased. And so you've managed to offset your carbon in a way that is reliable and traceable.
All right, Paul, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.